Welcome to the Daily Insights That Matter. In this DITM, we talk about the global opportunity for Indian companies which could soon list themselves directly on foreign exchanges via the Gift City. We also talk about Apple's India revenue, which has breached the 50,000 crore milestone. Now, according to a report by Money Control, the direct listing of Indian companies on foreign exchanges through the Gift City could soon be a reality. While it is still under talks awaiting the PMO approval, let's look at how this would benefit the Indian companies and the investors as well. Now, for investors, Gujarat International Financial Tech City, or rather the Gift City, offers simpler regulations, tax breaks, and dollar-denominated trading. Foreign investors have already been trading in products like the Gift Nifty, which was earlier known as the SGX Nifty in Singapore. Now, with the recent announcement of the direct listing of Indian companies on foreign exchanges, foreign investors would have easy investment access to both listed as well as the unlisted Indian companies. Now, currently, overseas listing by domestically listed entities can be carried out only through American Depository Receipts, or the ADRs, and the Global Depository Receipts, or the GDRs, like in the case of Infosys, Tata Motors, etc. Additionally, some companies have opted to just list themselves on international exchanges like MakeMyTrip, which has listed itself on Nasdaq. Now, the direct listing proposal has been in talks for a really long time, with a list of preferred overseas destinations like the US, UK, Hong Kong, Singapore, China, Japan, and several others. Now, the move to directly list Indian companies on foreign exchanges is a significant move, bringing in a host of benefits for the companies. Now, listing on the IFSC would allow companies to access foreign funds without having to list outside India, which involves a lot of regulatory challenges. Moreover, since it is dollar denominated, it will be cost effective as investors are not required to convert their money to Indian rupees. Now, this would result in transaction costs to be low and would not eat up the investors' returns. Now, this development could contribute to the continued growth of the financial landscape within the country and integrate ourselves with the global economy as well. Apple had a fantastic fiscal year in India in FY23. Their revenue skyrocketed to nearly 50,000 crore rupees, which is a whopping 48% increase from the previous year. Now, this data comes from Apple's Registrar of Companies filings. Sales reached 49,321 crores and the net profit saw a substantial 76% rise, hitting 2,229 crore rupees. Now, this net profit growth is the fastest that Apple has experienced in India over the last 5 years. Now, most of Apple India's revenue, which is around 94.6%, comes from product sales, while the remaining 5.4% comes from maintenance and services. Now, Apple is expanding its services in India, even though it already contributes about 30% of its global sales. Now, this shows their commitment to growing their services segment within the Indian market. Now, India looks like a promising market for Apple. They've been steadily increasing their sales, even with their products being priced at almost 3 times the average phone cost in India. India's relatively large user base, where Apple has limited penetration yet, offers plenty of room for growth, and industry experts are really optimistic about the future for Apple. Now, we all know that Apple isn't just looking at India as a market, but also as a hub for manufacturing and innovation as well. Now, it's exploring India as a significant manufacturing center, considering it as an alternative to China. Now, Apple considers India as a vital market for several reasons. Now, there's untapped potential in the market, opportunities to diversify beyond China, and the Indian government is providing incentives and relaxed regulations, making it an attractive destination for Apple's business expansion. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.